What's going on, everybody? It's gonna be a video on CiSD's. I love these because these are a way to have an entry model. Prefer to use them on the 1 minute. Just makes it much easier. In a higher time frame, it just consists of a lot. It just takes longer. Usually, it's much harder to fade the market this way. What it is it's an entry model based on when you have a series of candles that wipe out some form of liquidity, and an opposing candle would be your entry. We have this low, we have this low that gets taken out. This is the hourly, by the way. This now becomes your CiSD. So once candle closes above here, you could look for entries around here. Let me just fix this, guys. Hold on 1 second. I hate this thing right here. It's useful in the morning, but trying to backtest it sucks. Yeah, this is just a quick example of a bullish one. Let's go to the 1 minute and I'll show you why I like the 1 minute better. It's just easier to deal with. I also love this indicator right here. Just makes everything much easier. You can see why. This is a very important level. This is Asia's high. This is London's high. Failed to take out London. We took out Asia. Usually when we take out higher frame liquidity, we tend to reverse. In this case here, if you did your bias, it was indecision, but whatever, we'll save that for another day. We'll just go over some examples. Perfect example. This is a 10 a.m. low. We have a sweep here. And I know everybody was probably wondering why we couldn't find an entry here. Is because if this low was taken out by any of these candles here, then we would have been able to use one of these. But as you can see here, we have both. I would prefer this one. And the reason for that being is we have all these candles right here. This would be your series of down candles that took out the low. So when that happens, you look for the opposing candle to close above it, come back down, tap, and that would be your entry. That would be a bullish change in state of delivery. Now, here's another tip. When a candle has a strong body like this, and this is for a bullish scenario, when a candle has a strong body like this and a small upper wick, you would use the wick. In this case, because the candle body is so small and the wicks are both big, you could have also used this one. But like I said, the reason why is this candle kind of like takes everything out, and this is the last move before this took out this liquidity, so I would prefer this one. As you can see, you have multiple reasons as to why you could have taken this trade. You could set a 10-point stop. We'll talk about stops a different time. But for right now, you could have targeted this. You could have, where was 10 a.m. open? That was down here. You could have targeted this. More than likely a very important area on a higher time frame. Where is it? Okay, yeah, you have this over here. this before they wrestle down. This is another reason why you could have taken this trade. Why you could have been long as well. We take out this 8.5. We kind of try to go towards it. 10 a.m. low, whatever. You get the point. Yeah. So let me pull up the text so I can write this down for you guys. Bullish scenario would consist of a series of candles, bearish candles, that take out a low or a swing low. Bullish scenario will consist of a series of bearish candles that take out a low or a swing low, and the most recent bullish candle in the move are going low. Okay, this would be your bullish scenario. I'm going to pull up another example. Let's see. These are when it gets tricky because you have all this move. You could maybe refer to, that's when you could refer to a higher time frame. This is the series of high candles. This got taken out. Gets tricky here too because we have this higher wick and then we have this here. Yeah, this would have caused a lot of confusion. This is what I want to close down. This is from today. Yeah, this is from today. Keeps bringing me to the same time. Okay, so this is a good point. Whenever we have, this goes for bearish too, but I'll show you guys on bearish. Whenever we have a low that's taken out, 9 times out of 10, obviously that would be a bearish scenario that we would take out a low. But in cases like this, where a low is taken out but closes bullish, that automatically now becomes your change in state of delivery. So in this case, like I said earlier, we have these high wicks and a small body. So now the body would become your new change in state of delivery. You must wait for a candle closure above and also a retest. So don't just enter blindly on just as soon as you get a candle closure above, because this would spook you out. And if you got in here and you seen it go up and you like just prefer to move your stop loss to break even, you would have gotten taken out and you would have lost this whole move up. So you would want to wait for a candle close above your change in state of delivery and a retest. You could have also entered here. Put your stops underneath here if you wanted. 10-point stop. It somehow always ends up being a 10-point stop. Is that to the wick? Maybe you could have targeted up here. 84 points. Most minimal drawdown. Yeah. It's very simple. There's not much to it. In this case, this low didn't get taken out. This one did. Once this low got taken out, we waited for a retest, and in this case, this was the low. These were the series of candles that took out the low, being that this candle took it out. These consist of this move. In this case, we have a large body with a smaller wick. You could have either used the wick, you could use the body. Being that it's like this, you would use the wick. Enter, break above, come back, retest, same entry. 10-point stop. This is also off of preference. It's whatever you feel like you want to do. To this is a lot of reasoning here why you could have exited here. But we could also do our little. Is it aligned? No, it's way too high. Okay, whatever. Makes sense with a large wick like this. I would have exited around here. Just makes more sense too. Pretty sure. Now let's see. So we're here on a 5-minute. Yeah, it just makes sense. You have this gap. Just makes sense to exit there. Let's do one more example. Just pick a random time in the market. Shit's lagging so much. I think I did this one already. These equal lows here. 940. Okay. I would say that this would be, yeah, I guess it's a series of candles. You'd have a little bit more drawdown than preferred. Candle closes above, comes, I guess we had this over here that kind of messed everything up, plus this gap. So this would have been your new change in state of delivery. Once price breaks above here, we obviously have momentum to continue going higher. Could have entered on this. You would have got, this was a tough trade. Once we closed here, I would have waited, being that we had all this here. We probably entered after we swept all this. It's still a good CiSD. I mean, you could have even used this. You could use this. It's the same, as you could see. It ends up being the same thing. Let's just say we entered on here. I know everybody's not going to want to wait for something like this, but let's just say, hypothetically speaking. Look, you're at 70 points. You could have just aimed for the high. Just called it a day. Okay. Um, let's do a little couple of let's do one more, and then we'll switch over to bearish. Okay. These are the last. Just move down. Yep. You can use the body here. This would also been a tricky one because, as you can see, we have price close above it. Comes back down. See if it would have made a difference. Yeah. I mean, could have waited. We would have missed it. Came back sometime later on. Went back above. It's just very important. In this case, it would have been better to use the top of the wick because, as you can see, price goes up, taps back into the change in state of delivery, shoots back up, distributes higher before coming back down. And it just makes sense this way because you have these lows here. They're swept by this move. Price goes back up. Let's just see something. Yeah, it's about right. Price pushes back up. This is the last highest point on this move down. Price fails, fails, fails. Finally closes above. And you could also take trade. I don't recommend this, but you can take trades as soon as we get a solid close above. But as you've seen in that other scenario, it comes back down and like kind of messes around before it shoots up. You rarely ever get days like this. I mean, there's volume here. It has to your context has to have like a reasoning with volume. So in this case, like this is pre-London, 2 a.m. and then as you can see, 3 a.m. opens. We target its pre-open. Just shoot up. So this is a clean trade. I love this entry. I use this for everything, especially with my strat, with my model. It just makes everything so much more easier. But you have to have context. You can't just take everything that looks like a CISD because it's just going to fry you. So if your bias is bearish, you have reasoning for it, and you're looking for an entry, that would be your entry. In this case, what do we have here? Yep, makes sense. Also, now we're going to talk a little bit about I'll space the videos out, so I'll just record another one. That's it for the bullish ones. Let's start the bearish ones now.